Welcome to the RIZZ Podcast. I'm Dana Light, and today I'm joined by James Bohan. He has built a career at the intersection of finance, real estate, and entrepreneurship. James is the founder of Stonehan, where he works with real estate funds, family offices, and developers as a strategic financial partner. Today, we're digging into how to use financial strategy to supercharge your marketing and business development in real estate. James, let's start at the beginning. What was your path into the real estate and finance world?
Yeah, thanks for having me on, Dana, and a good question to start. So I kind of grew up in a real estate family. I'm a fourth generation real estate developer myself. So we kind of grew up at the dinner table talking about cap rates, tenants, all the stuff that goes into managing and owning property. So I had kind of the background of that growing up. And then I started my career as a CPA with a firm called Rothstein Cass that really specialized in alternative investment funds like hedge funds, private equity funds. And then given my background, I slotted into the real estate fund side of their practice. And then that firm was bought by KPMG, and I worked there for a bit too.
Very impressive. So, sitting at the dinner table as a kid, are there any conversations that you remember that made a lasting impression on you?
Um, one thing that my parents always talk about is how I had like an astute grasp of this from a young age. Like for example, like we were driving around town and I saw like three gas stations at one intersection. I'm like, okay, well, one of them is going to go bankrupt because can't that's way too much supply and demand. So I had a great sense of supply and demand from a young age. And my dad also said I talked about owning a blockbuster because I'd want to, own the things and rent them out. That would have been a great long-term play with the internet, but I've had this idea of an owner's and real estate owner's mentality from a young age.
That's awesome. So you're living in Coeur d'Alene, Idaho now. And during COVID, I feel like Idaho really got on the map as one of the fastest growing states in the country. So, as a local expert, what are some of your thoughts on the current state of the commercial real estate market in Idaho?
Yeah, great question. And even before COVID, Idaho was one of the fastest growing states in the country as well. And it continues to be. I just went to an Idaho Economic Summit about a month ago, and the western states like Utah, Montana, Idaho are some of the states experiencing the best growth right now. We had a huge boom during COVID in years 2022 to 2024, and we bought some hospitality property around here. And honestly, it's starting to drop off a little bit. We're still doing well, but I've noticed maybe like a 5 to 10% reduction in revenue. I think partly because of that is like we were just so busy during COVID, it's hard to replicate those boom years when we're open and the rest of the country or world is not. And so that obviously has an impact onto revenue at the end of the day. But I still think it's an incredibly strong market. People are still moving here. I'm still buying here. And if you look at the chaos going around the country, especially in LA over the past couple of weeks, it's just more of a incentive for people to, move to the western states, Idaho, where that's less prevalent.
So, you mentioned hospitality. So, of all the asset types, is that what you're most bullish on?
Actually, it's not. The one I'm most bullish on is kind of this idea of the rent by the room or a pad split or a house hacking kind of model where you either buy or rent something wholesale and then sell it off retail. And by that I mean you build a whole duplex, but maybe then you're renting out four rooms to four different tenants. And we're designing things in a way where each tenant will have their own kitchenette, their own, living room or a studio space. So there won't be any like shared college living spaces like a living room or a kitchen where the roommates are gonna complain to each other about, not doing the dishes. That's no one wants to live like that anymore. And so we're able to produce really great units in a way that are self-contained. They have their own entrances, but we still are able to maximize revenue within the approved unit count by just renting it by the room instead of as one total price. And given the way kind of the economy is going and rents skyrocketing everywhere, we see this as a great way to bring affordable housing, especially to these kind of resort or lake towns like Coeur d'Alene or Sandpoint. Lake Tahoe is another great example of where they have a housing crisis, given that the service staff can't really afford to live within Lake Tahoe. So they're driving in 45, 90 minutes a day on commutes. And this is a model that we've been working on that works really well in these resort towns.
That's super interesting. For any investors who are listening, where do you see the opportunities just for general investors to come in into Idaho?
Um, there's people out there, raising funds. We're working on one right now as well. So if they're interested, they can reach out to me. If they want to own it directly, they can contact some local brokers here. I could also get them in touch with some people I know. So, um, at least in the northern Idaho Coeur d'Alene region, there's other people down in Boise, but yeah, just reach out to your kind of broker network.
So let's switch gears, talk a little bit about Stonehan. So you're providing CPA, CFO services for the financial, for real estate, the real estate industry, for family offices. Where did the name come from?
Great question. So the name Stonehan came from my grandpa's last name, Stone, and then my last name, Bohan. And I just kind of put it together, Stonehan. I like the name Stone and things that we can use some castle imagery in our branding, and I think it's a great way to honor family and honor legacy.
I love that story, and I think that's amazing. So you help new fund managers structuring their funds. Can you offer a piece of advice for somebody who's starting out, starting a new fund?
Yeah, I think a couple pieces of advice are one, uh, keep it simple, don't bake in like 8 tiers of waterfall into your first fund. Like if you don't know how to run the actual IRR calculation yourself to run a multiple tiered waterfall, maybe you shouldn't be doing it. There's very simple structures out there. Investors love simplicity as well. And then also, make sure you talk to a good tax advisor to make sure you as the GP on your end are properly optimizing for your after tax benefits from running the project. And that simply, at the bottom line, that essentially makes you want to split up your fee income, your fee ordinary income via one vertical, and your promote and carry via another ownership vertical as well. And that's one of the things we help a lot of our sponsors out with as well.
What about on the back office side? What do you suggest for anybody wanting to improve their operations?
Definitely get a good bookkeeper who understands real estate in from the jump. If you're doing funds, make sure they understand funds too. So you need an expert like in both real estate and funds. We offer some of those services, but we encourage people to hire in-house often too. And then maybe you hire like an external CFO to review everything and make sure it's all copacetic. A lot of real estate, excuse me, builders know a lot about the blocking and tackling, the nails, the hammers, the wood, but when it comes to accounting, their eyes just kind of glaze over and they don't want to deal with it. But you really got to deal with it as an operator, and especially when you're running other people's money, is you need to make sure every dollar is accounted for.
Absolutely. So I noticed on your website that you wrote a white paper, 6 Reasons to Invest in Hotels in 2025. So tell us why you're bullish on boutique hotels.
Yeah, there's been a trend lately where a lot of Airbnbs around the country are one, they're slacking in the revenue. They've been kind of dipping. And then two, there's been a lot of local legislation around because just like I said, in these resort towns like Lake Tahoe or Coeur d'Alene, the local population gets pushed out. And this is especially prevalent in Sandpoint when people come in and buy a house and don't open it up to the local housing market, but just take that inventory essentially offline and put it into, more of a hospitality market. And so there's more and more um, local jurisdiction risk with that play. But if you go in and you buy a hotel, then you're already basically permitted for that. And it's kind of funny, like these people are promoting like, oh, invest in boutique hotels and not Airbnbs. They're like a multi-family property instead of a single family rental. It's kind of like putting some shoe shine around something that's, already there. I think between that and the way you can run some of these smaller ones with limited staff, and the best in AA technologies makes them extremely desirable. And as we are potentially in an inflationary, stagflationary environment, with hotels, you're able to reset your price daily or hourly or to the minute and just really track where um, prices are going to. Whereas with a multifamily building, you can really only reprice every year or retail every 5 to 10 years and office 10 or more. So when we are potentially in a large inflationary environment like we were for the past 3 or 4 years, we are able to use technologies that do revenue management automatically. So we're signed up with a company called Price Point. I've tried three. They're the best for me in my market, in my property. And they basically replace a job of like someone who used to get paid like 60 to $120,000 a year to be the revenue manager for a big hotel. It goes in, it takes your listing, you put some comps in, you say like, hey, I'm 5 to 10% off above or below these comps in this area. It monitors Google Trends, it monitors other bookings that are happening on publicly available OTAs and kind of help set your price uh, to be maximizing revenue, kind of like YieldStar does for the multifamily industry. There's a lot of AI softwares out there that are really helping smaller hotels have this like, service level of someone that used to get paid like, close to six figures to do now is available to anyone and everyone for a very competitive price.
That's great information. One thing that I know about boutique hotels is that they lack brand recognition and they live and die by their own marketing and their own reputation. Can you share an example of a group that you admire, maybe somebody who's done it well?
Yeah. So I'm part of this group called Experiential Hospitality, which was founded by this guy who built a bunch of A-frame cabins outside Waco, Texas, and he, did a lot of placemaking with it, and he was able to sell all these seven cabins for. So I'm just looking for his name right now. It was just on the tip of my tongue, but I couldn't come up with it. But he was able to sell these seven properties for $1 million each. And a lot of that came from uh, financing, or sorry, a lot of that came from branding and building something really cool that people wanted to go to.
Wow. All right, so switch gears. Let's put your CFO hat on for a second. When you're advising real estate developers on annual budgets and long-term financial planning, how do you advise them on marketing spend?
It really depends on his name is Isaac French. I knew as soon as you got off to another topic, I was remember. His name's Isaac French. He's a really cool guy. I've met him, but and I hope you can edit this and cut maybe some of this out. But it's really cool when you do this placemaking thing. People are really looking for an experience a lot of these times, especially with the younger demographic versus the older generation that just wants to go to any other Marriott. Like using modern social media techniques, which are easy with social media, email campaigns, all that you're able to really brand yourself as a boutique hotel with not a large investment, and that kind of helps set you apart. Um, Pause, and then I'm back to your other question here. Um, when advising people on marketing spend is, let's say, a percent of revenue, it really depends on where they're at in their business. If they're like in a heavy growth mode, obviously that ad spend or that revenue spend for marketing is going to be a lot higher than if you're kind of maybe established and just plugging along and just want to do some stuff to maintain your market presence. So I'd say maybe, 2 to 5% of revenue if you're in high growth, up to 10%.
When you're advising a sponsor on how to attract capital, how do you guide them on positioning themselves?
So it kind of boils down to two buckets on what they're going for. One, are they going kind of for retail investors? They're going for the more institutional look. If you're going for the more institutional money, you really need to have your track record together. And you really need to have been in business for a while. A lot of institutions are not going to fund a first-time developer. It's pretty unheard of. So if you're going after retail money, I'm part of this group called RIZZ Masters, which really coaches people to create a funnel, have your online presence, get people into your nurturing funnel where you capture their emails. Maybe you give them a lead gen, maybe you give them, some things for free. You give them some content, and then you kind of get them into your funnel where you do a slow drip campaign and get them to know what you're up to and build that relationship digitally over time. And the other thing I'm going to advise people, and this is something I've thought of myself, is, it takes a really long time to get marketing established. When I hired a marketing company to really establish an online presence for my CPA firm, I told them from the jump, this is a 5-year plan. I know it takes these things a long time to get going. So we've already had some great success in the first year, and I can just kind of see the trajectory of where it's going to go. But you really have to be long-term minded with what you're doing.
Absolutely. So many people think marketing is a switch you could just turn on and off. And same thing with raising capital. It just isn't an on-off switch. It's consistency and it's just doing it right and being in for the long game. So I'm glad that we agree on that.
Yeah, I think
So,
the on-off
sorry.
switch comes after you've done the work after a long time, and it's the on-off switch with ad spend. It's like, okay, we're having a new raise, let's bump the ad spend up. That's the on switch, you know? Or if like, hey, I'm like, okay, I'm at capacity for tax season, turn the switch off. You know, I'm like, okay, it's out of tax season, we have some availability, turn the switch back on. And that means ad spend, but I'm still posting, a few times a week. It's still establishing that brand presence, but deploying it out, I think, is that just throwing some money through the system because the algorithm loves money. That's what I've learned the whole time is you're like, oh, they like this, they like real, like they just like money. At the end of the day, you push money through it, you're going to have better results than just trying to hope and think something goes viral.
That's a great point. So back to the sponsor side, in your experience, what separates the sponsors who have scaled successfully from those who stall?
I think it's a couple things. One is people who stall, maybe talk about it a lot more than actually doing it. And then people who are succeeding, they have the track record. Like I said before, this is a long-term minded business where you need to establish that track record, especially if you're going for institutional money, and then be able to communicate that track record. And that's a combination of, your back office, accounting and finance being in order, and your marketing decks looking really good. When you're out in the institutional money raising game, they're often going to send you a DDQ, which is called a due diligence questionnaire. And it might have, depending on the one you're going with, 20 to, 150 or more questions in there. And there's a lot of document and financial requests that come along with it, talking about your investment strategy, all that. And part of the test, I think, with those is how quickly do you get these things back to them? It's like, hey, give me your 2024 financials. Like, oh, hey, wait a minute. Yeah, let me get back to you on that. That is a sign, that you don't have your stuff together.
Yep, that's definitely a sign. What's one thing you wish more real estate entrepreneurs understood about building a real business and not just doing deals?
That's a really good question. I think when you're building a business, that often means that you're bringing in more people or employees, and that's really hard to do from the jump. And especially, it can misalign your incentives where you have this large payroll and you just need to do deals to keep the team together. So it's definitely uh, not for the faint of heart to go into this. When you're just doing deals, you're living and dying by the next deal. And if you don't have a team around you, it's really hard to scale up.
These are all really great insights, and I think everything that you've mentioned is going to help anyone who's listening. So I just wanted to say that I think that this conversation has been great. You've given us a ton of insight, and especially around financial clarity, strategic marketing, and how they go hand in hand when you're trying to scale a real estate platform. So, how can people learn more about tax planning and investment strategies and connect with you directly?
So people can follow me on LinkedIn. James Bohan CPA is where that's at. I'm on Instagram as well, James Bohan CFO. And then our website is stonehan.com. That's stone like a rock, Han like Han Solo. And you're able to join our CPA waitlist there or get in touch with us. Or if you want some of those broker or other local contacts I mentioned, you can get into us that way.
James, thanks again for joining the podcast.
Absolutely. Thanks for having me, Dana.
Thank you.
Cool. Yeah, that did go a lot better, I think.